The inflation issues have been really persistent for most of the year. I would say there's a couple of factors that we see right now. Demand came back very quickly, and our consumer businesses in particular saw a big surge in demand really in the back half of last year, and then that's extended into this year. But what we've seen is there's a real acute problem in getting supply. And I heard you guys earlier talking about, shortages of supply just broadly, whether it's in the housing sector or anywhere else. We're seeing that a lot of the places that are manufacturing goods for the world economy, continue to be struggling with the pandemic. So getting adequate supply has been very difficult. On top of that, we have record amounts of job openings in the United States. The JOLTS number came out a few weeks ago at over 10 million for the first time ever. I tell you, that's a macro level. On a micro level, we're experiencing that. And so the combination of both supply challenges and labor challenges is really creating, these inflationary conditions that haven't existed in a long time. And our personal view is these are going to remain with us for an extended period of time. This doesn't feel as transitory as what the Fed is saying.
Clearly, there are a lot of mismatches here, some of that down to inventory rundown through the last 14, 15 months or so, and some of it's down to the mismatch between openings and available labour with the skills required. But as you say, there will be a gradual matching up of both inventory and demand and labour and job openings. As we come into early next year then, how do you think companies will have weathered the pressure on profitability and margin from just the lumpiness we're experiencing at the moment of these logistical issues?
Yeah, so, it's a really good question. And one of the things that we've seen is profit margins have really expanded. For our company, we put up record profit margins in both the first and the second quarter, EBITDA margins of 20% that carried over in both the first and second quarter. And that's with these pressures that are coming through, these inflationary pressures. Now, what we're starting to see is that there is broadly a pass-through of prices that is happening. And so if you think about it, over the last, kind of 15 plus years, we've been in a disinflationary environment. And then really on a dime, we've turned into an inflationary environment. And what's happened is most vendors are pushing through prices. We're pushing through prices pretty much across the board in all of our companies. Our customers are accepting that. And so we feel that margins are going to hold up through the balance of the year, similar to what they were in the first half of the year. And, I would remind everyone that if you just think about, kind of on a macro level, the U.S. economy is back to pre-pandemic levels, yet we're still 6-7 million employees short of where we were pre-pandemic. So all of that productivity enhancement has really moved into, profit margins. And I think as we get through the balance of this year, we're going to see very strong profit margins. Now, the question I think will be, does some of that give back in 22 and beyond as some of these labor pressures, predominantly persist?
Elias, good news. I've just made you the chair of the Federal Reserve. Do you raise rates? Do you cut quantitative easing as well, given everything you've just said?
Yeah, well, I would certainly be tapering right now. It feels like, given the inflation that we're seeing and given, again, these acute labor problems that we're experiencing, that the last thing we need is to have as much monetary stimulus as we're getting into the system. So if it were me, I would start a tapering immediately. Now, you got to juxtapose that against where the capital markets are and making sure that we have an orderly capital markets that can accept the reduced monetary stimulus that would come from tapering. But I think if you believe the inflation is less transitory, which is the camp that I sit in, then I think immediately starting to reduce the monetary stimulus through tapering seems to be the right move. And then I think longer term and into 2022, we may need to see rates start to tick back up in order to cool down some of these inflationary pressures.